Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape. For longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/let it grow and check out some product and see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. Hey, what's going on, guys? Welcome back to Let It Grow Investing. Thank you very much for stopping by. I am Jeff, and we're going to talk some stocks here today. We're going to talk about all the craziness that's going on with election news, another Trump assassination attempt. Man, there's just craziness going all throughout the market, and we're going to try to cover it all. So again, thank you guys for being here. Thanks for stopping by. I know you got tons of different options as to where to get your news, where to get some insight, and just appreciate you guys, stopping by and subscribing, sharing all the fun things we can do over here to help support the podcast. But yes, so it is about 4:45 on Sunday. I did just hear about another Trump assassination attempt. West Palm Beach on a golf course. I believe it was a Trump course. I'm not sure about all the details. I'm just kind of getting this in. I do believe the guy is in custody, tried to jump down onto 95 and get away. I don't know if there was an accomplice. I'm sure more is going to be coming out. I really just heard about it myself. But yeah, I'm sure that's going to have the market kind of spinning on Monday. What's going on? Where do we go from here? How do we solve the way that we're trying to handle problems? And really just what the market is going to, do with this new news story, right? So we'll see what happens there. So yeah, we've got that. We've got CPI last week. Everything kind of looked like it was kind of still trending down. I believe we had airfare and lodging numbers were up, but a lot of that was kind of already priced in. We knew that some of those numbers were going to be a little bit higher, but overall, we're still trending lower. So we've got that to contend with as we're coming into what we are going to be looking at the Fed this week as to what are they going to do? Are we going to get that 25 or that 50 basis point cut? And I will try to go ahead and share my screen here. Let's see if we can't pull this up. I'm looking at the CME Fed Watch tool, and right now we're 50-50. Deadlock even as to what's going on. Yes, last time we were over here in the 25 basis point cut camp, down to 500 to 525 basis points. That was much higher. I forget the exact numbers, but we did have a spur come in here that is bumping up this 475 to 500, meaning we would get a 50 basis point cut for Wednesday's meeting. Now, there is kind of an interesting thing that drove up some of this number on Friday, and that was a Wall Street Journal article. And this has happened a couple times now, right? Back in the banking crisis, back in, 23? And then in 22, we also had news that came out that said, hey, basically 30 hours before the event that the Fed wanted to go to 75. So that is the Nick story, Nick T on Wall Street Journal, also known as Nicky Leaks. You kind of get the news from the Fed first from him because they're in blackout. They can't talk about it, but they're going to leak some of it to him. We've seen it happen a couple times before. I'm trying to get the right Wall Street Journal. Interest rate cut debate. That's not the one. Maybe it is. Yes, it is. I don't subscribe to the Wall Street Journal, but yeah, Nick T. Morose of the Wall Street Journal, basically saying, hey, the Fed rate cut dilemma starts big or small. I did see screenshots of this. Like I said, I do not subscribe, so I can't share this to you. But basically, end of the story here is he wants to pretty much say that, hey, the the labor conditions look to be favoring a 50 basis point cut. So we did get kind of the backdoor entrance to what the Fed is thinking on Friday, and that really changed really what's going to be happening during this week with Fed cuts. So we're really trying to see what's going to happen. It's crazy, but a lot of the problem here is really what do we do with that news, right? Well, if we get to 25, a lot of economists say that's really not enough. We're going to put this thing into a hard landing, a recession, a collapse if we don't do this quick enough. We're going to have a lot of job cuts, layoffs, and we're really betting on the Fed to keep us out of that. So if they go ahead and go ahead with that 50 basis point cut, maybe we stop some of the layoffs. Maybe we spur the market. We talk up the market being really strong. A lot of that really drives up some of the other numbers, and we can avoid that recession. So some people saying it's 50, but hey, we still got a tough road to go to weave our way out of a recession. So if you do plan on the Fed not getting us there, the typical play, the historical play is to go to bonds and gold. That is kind of the playbook as to what's going to happen when things got way too ahead of themselves, and we've eventually got to cut, but now we're not doing it quick enough. We're not getting things under control. And then, the Fed eventually just has to give up, right? They have to cut those rates so quickly and go from that 550 down to, 350 within the next 4 sessions, something like that, to where, that becomes the Fed capitulation. That's when the Fed just gives up. That's when the Fed really just starts cutting heavy in order to avoid a serious collapse. So that is definitely something that we're trying to avoid. But we really got to toe that line of where do we go from here? And when the Fed does that capitulation and they really start cutting rates heavy, if we get into that situation, that's when you go from gold or bonds or money markets back into risk on assets, equities, right? So we want to get back into stocks when the Fed really starts cutting. So is this 50 basis point going to, tiptoe us out of the woods, or are we going to be put into a rougher situation out there? So it's really a tricky call. Man, it's really a tight line to play. So I think you got to have yourself set up in both directions, right? You want to have some stable money. You want to have some in quality and safety names. And then, you want to have a little bit on the sidelines to where you can invest if things really do get sideways. I will still stick to dollar cost averaging. We've been doing that for pushing 3 years now in the Let It Grow investing challenge, right? The $200 a week. That is kind of my way of dollar cost averaging into the market. Maybe not into just one name, but into the market overall. And that allows us to pick names that look like they're on sale. We want to build up a position, different sectors, different things, right? On the podcast, we talk about different names that work well for that given week in time. Traditional dollar cost averaging would be, hey, say I want to buy Pepsi stock. I want to buy it for the next year. I want to build up a $10,000 position. I'm going to be putting $200 a week into just Pepsi stock. And that is the position that I'm trying to build over time. It doesn't matter if it's high, doesn't matter if it's low, doesn't matter really what the news says, as long as nothing really changes in your investment thesis as to why you're buying that stock in the first place. So yeah, we've got a lot to look at there, right? I really want to see you guys succeed in whatever you decide to do. Some people want to go all in on 4 names. Some people want to have that diversification of having no more than 5% into any one name in the portfolio. That's where I fall. So that'd be 20 names at 5% or less. Granted, my portfolio is quite a bit more than 20 because I see shiny objects and I have to buy them if they're on sale. But yeah, we're kind of digressing from what I'm getting at. You really want to build up that position that you're comfortable with. You have to know what's going on with the Fed, with the economy, to really know what you're going to do when, the S hits the fan, if you will. So some of these are going to get hurt. The heavy risk assets could get hurt, right? We've already seen a pullback in a lot of them. We've seen that over the past 12 months, really. A lot of them, you look at Enphase being a $330 stock down to what, 115, 120, something around there. A lot of that has to do with how much people were spending, how much people are putting into solar, The fact that, California had some new upgrades and Europe was delaying a couple things. So there's a lot of different things that we want to really take into consideration why Enphase might be a great company, but it might not be the best company for right now. I do believe that that's going to start turning around. The numbers do look much better for the fourth quarter of 24, and then really starting to rebound in 2025. Not a nod to go ahead and buy Enphase, but just the point that we need to really know what's going on and why these stocks are trending down, and then when we really want to buy them. All right, so I did want to get into a little bit of news here. A couple different names that we follow that I really think were newsworthy this week. And I'm going to try to pull up just what's going on out there and try to get you some of the news that I'm seeing that I think really is pertinent to what we need to be looking at, for this market cycle and really where we want to go. So Albemarle, man, this one, I thought we were going to be doing okay when I bought this. I bought it too high. My cost basis was around 120. Yeah, well, it didn't work there, right? It did not work. I had been buying some lower, but lithium prices have been getting cut, right? People were all on board with lithium. The cost was going up. It was such high demand. There's still a lot of demand, but the prices of lithium, as more people were mining it, have come down. A lot of people were kind of dialing back their EV plans and the targets, so that kind of lowered some of the expectations on it. Well, Albemarle and other lithium manufacturers decided to, hey, what can we do to raise the price of lithium? Well, we can just simply cut production. We don't really have to worry about how much is out there. If everyone in the industry starts cutting production, we're going to ramp up the price of lithium because it's still high in demand, but we're making too much of it. So that's what they did. So now if we look over the past 5 days, this thing did spike up on that news, right? We're looking at the 5-day chart here, shooting up from like $76 up to, we're 87.44 right now. But yeah, we spiked up to 91, right? So a big gain on some of that news. And basically, hey, they're going to play the game. They're going to sell their product for more, and they're going to get rid of some of their cost. They're going to do those layoffs. They're going to slow down the production line, and that's hopefully going to help Albemarle. Should help ABAT, which we were buying week 40 last year. American Battery, which was ABML. We're looking ABAT. This thing, they were recycling lithium, and those prices and the cost of building the production facility were sky high, right? But now with lithium being low, this thing, really was having a hard time and a struggle to pay their bills, make enough lithium, recycle it, and then sell it for a decent profit. So hopefully that helps a company like ABAT. It might be a little tough. It's going to be rocky. I know that. Man, I rode this thing down to the bottom. This is a terrible play for me. I should have had a stop loss on this thing. But I was really hopeful through all the, hey, we're getting, the ground license. Hey, we're getting the production facility going. It just kept seeming like great things were right on the brink. So I didn't really want to sell it, and I just rode it to the bottom. It's painful, right? But we're at 102. Analyst research probably puts this thing in the 3s or 4s. Man, I got nothing here on tip ranks, but nonetheless, I'm sure on Reuters, it's probably in the $3 to $4 range, but it's got to get there, right? It's got to get there. It's got to do something. And right now I'm just so far down on it that I'm just going to ride this thing out and we'll go from there. But I guess that being said, that is a loser for me, but, some other losers this week, oil companies, right? We're looking at Chevron. Well, this might have actually started a rebound on some of the news that's out there, but we definitely had a slowdown in China. We had lower oil prices here. So we had a big pullback in the price of crude, which is hurting the oil majors. And yeah, let's take a look over the past month, right? I was trying to load up this in the low 140s. Well, we kept dropping down to about 137. We started recovering here. So I do like this setup here. I'm thinking that this is not going to last forever. I do want to get this 4.68% dividend yield over here. This one pays me a good chunk of money as it is right now. I just got paid on this one 5 days ago. So yeah, I'm still looking to build up more Chevron. I do like the play. I like the fact that it's quality and it's cheap, right? That PE, the multiple, we've got that earnings at $10.10 times your PE of 13.8 gets you back up to about 140.61 roughly, right? So I still like the oil plays. I'm still trying to build those positions, although these have hurt this week, right? Other wins this week. Well, first up, man, and no one even voted for this one. This blows my mind. I was all but pounding the table and telling you guys to buy Broadcom on Monday, right? Last week, this time, I said, this thing is too cheap. Go ahead and get it, or I'm buying it, right? So this thing, I was buying in the 130s, and it shot up to 167. Don't say you didn't hear it here, because, man, I said Broadcom should not be this cheap. So I'm still long on Broadcom. I don't have any covered calls on this one right now. If it creeps up a little bit higher, I'll probably write another one, probably in the mid 170s for, probably pushing $200 as my price target, maybe 6 to 8 weeks out. That's kind of what I'm looking for there. Viking Therapeutics, that was another one that was doing well this week, right? And I was looking at this one as an alternative to Eli Lilly and Novo Nordisk. And man, I'm still thinking this is a load the boat kind of situation. If their trials are going well, and it still looks like a lot of people are on board. So Viking is up 6% on Friday. If we look at this thing over the past 5 days, it did some great numbers here. Yeah, I mean, look at this chart. We were down near 53 and just shot right up to 66. Man, I will probably hopefully get some more of this if it comes back down low 60s, high 50s. I'm going to try to buy some more. But like I said, analyst research and a lot of their trials are going really well right now. So I'm really hoping that this thing starts to take off, and then we will be printing money on Viking. Micron, I bought one share just to basically put it on a watch list in my portfolio. Did well as, again, another stock that really did well this week. That kind of makes me kick myself for only buying one. But yeah, Micron in the chip space, I still think that they've got a heck of a lot of room to run, right? A lot of that demand for storage and all has really dropped down. Pricing on semis have dropped down. And I really do believe that there is going to be, a resurgence in the demand for chips, right? So I think that Micron, as well as Broadcom, I think both of them are strong stocks to buy for a long-term play. So I will probably look more into Micron and see if I can't go ahead and purchase some more MU going forward. Did we buy Sentinel One? Is that the name of the week? I think it was last week. I think that's what we bought. This one did okay. I think we were able to get this in like the $21 range. I still got about 27% of upside here. Yeah, decent 5 days, right? Decent. We had dropped down to about 2018 at the low, up to 2268. So a decent little jump up higher. Still hoping that this one does well. I still really want to be back in CrowdStrike. I think that name could be a good way to play long term. It's still below where I sold it at. It did have a decent little rebound over the past week, right? From 243 to 259. We did hit probably 220 about a month ago after all the big sell-off here. It's probably not far enough. Yeah, we dropped down to around 224. Yep. So, man, I really still think that CrowdStrike could be a good long-term play. No one voted for that one this week. But yeah, I still think it's a great play and something that could be added. And I don't know, we just really got to hope that the lawsuits aren't too bad. And a lot of that pricing and a lot of the pre-sales that they had on their products, that's how a lot of the security industry works, is that they get paid up front and then they provide the software. And we hopefully will have those companies coming back and using CrowdStrike for future security projects and everything else that CrowdStrike provides. All right, we got Adobe. They did report this week. They did trade off on this news. And if you guys remember, probably, 3 weeks ago, I went ahead and sold out of Adobe. I sold out of this one probably in the 560 range or so. I think it did climbed back up to like 580. But yeah, on Friday, we were down about $50, down about 8.4%. And yeah, I can't say that I was anticipating a rocky number here for them after NVIDIA, after Broadcom, a lot of the other tech names that they would beat and then trade off. So I was kind of thinking that one would follow trend, and I went ahead and sold off Adobe on some of those gains that I had. I wanted to lock that in and move this money elsewhere. So that's what I did there. But yeah, I still think long term, I still think Adobe is a great company. I still think that a lot of the things that they're doing for AI and using that in Photoshop and all their different tools that they have, I still believe long-term creators are going to still go back to Adobe. They're comfortable with the platform, and I think that is still going to be a solid trend in software going forward. Oracle, ORCL, man, they did well. A lot of people really, piling into Oracle as of what day did they report? Had to be Thursday, right? So we definitely had this gap up here, 157 up to 170, came back down a decent bit on, what does this have on the 13th? I guess this was the 12th, right? So where are we at? 12th. Yep, we got 15th is today, 14th. Yeah, 13th was Friday. Sorry. So we did come down a good bit on Friday. We gave a little bit back, but I still think long term that Oracle is showing their power and using a lot of the different NVIDIA software or hardware to get a lot of their things moving forward and really doing well. So Oracle long term looks to be in a solid spot, and looks like a lot of their plans have a lot of investors pretty happy with what the company is doing right now. Not a whole heck of a lot of upside based on current numbers from the past 3 months, all these 27 different analysts, but we do have around 6% of upside from where we are right now. But a lot of these new price targets are coming in around 200. We did have a hold from Morgan Stanley at 145, TD Cowen at 190, Guggenheim and Bernstein right around that 200 mark. So depending who you listen to, decent amount of upside. It's not one that I've normally take a look at, but it is one that probably deserves a second look. So we got that. We've got, we talked about Palantir, right? Palantir, man. I am getting more and more bullish on Palantir. I did miss this one last time. They did get the nod to be brought into the S&P 500. Now, I did listen to a interview with Alex Karp, the CEO, and he essentially says, like, hey, told you so. People thought we'd never be profitable. People thought we'd never make it. People thought we would never have a platform that would really work. Well, they are providing all the software that's AI to a lot of government entities and as well as a lot of big corporations. So the fact that they're being brought into the S&P really doesn't change anything long term for them, right? They're still the same company, but now you got a lot more people. Hey, if you're buying SPY, you're buying a little bit of Palantir. Palantir, Alex Karp was saying that he expects a 10x from this spot, right? From this $35 a share, which is what, around $70 billion in market cap. $79 billion in market cap. He expects this to 10x from, I think it was last week when he said this. So he is really, putting his feet to the fire on this one, because if they don't, he looks bad. But he's kind of saying, like, we're going to do it, right? Don't doubt me now. We've already done what you said we couldn't do. We're going to continue to do what you said we can't do, and we're going to continue to grow. I personally think that Palantir has a great product and all the things that they're doing. The contracts are solid. They're in the right spaces with the right products at the right time. And once people adopt their products, it's really hard to get off of them. Software gets updated all the time. So you really can't, and pretty much everything is subscription anymore. So you're going to have these new products and new updates going forward, and it's really hard to get off of them. Versus, NVIDIA chips might be good, but hey, now AMD made something new. We want to go to AMD. You could simply just buy the AMD chips and load. I mean, I can't simply do it, but someone can do it. They can load everything that they need to on those chips, right? You could buy a different computer that has AMD versus NVIDIA. So a lot harder to get off of Palantir software. The price point, the PE multiples are going to be higher on software for the fact that they are more of a cyclical, rotating, revolving door of income coming in. You know, you might get 3 years out of an NVIDIA chip before you have to upgrade, but that you can still go other places, right? So you're going to get a higher valuation when it comes to a PE or price to sales, things like that on metrics for a software company. But man, I still believe that Palantir, if I can get some more of this in the high 20s, low 30s, I think I might load the boat. I really do believe that what they're doing is in the sweet spot of where I want to be positioned right now, at least with a good portion of my funds. So I am really, really looking to see how I can add more of this and really set myself up for 5 to 10 years from now, because I think that they're going to be a main player. Not to say that NVIDIA is not. I mean, if you look at the analyst research, there is downside on Palantir right now, but that's after a lot of good news, right? They had good earnings, S&P induction. They've got a lot of different things going on right now. So yeah, hey, it's saying, hey, we're about 24% overvalued at this given point in time. Some of those numbers are probably old. We've got, Bank of America is more or less pounding the table saying, hey, they are going to 50. I was just reading that article. Citi saying 30, Wedbush 38, Monash saying 18. Could that happen? Sure, it could certainly happen. But if it does, I think I'm going to be there to buy, hand over fist. I think that's what my plan is going to be on Palantir. So I'm happy with the progress that they've had thus far. I still believe in them going forward. And having Alex Karp at the helm, he seems like a bit of a lunatic sometimes, but I do believe that he is really driving the AI software world forward at an incredible clip at paces that people said that he could not do. So I'm still bullish there. We talked CPI. We talked about a lot of these different companies. Bitcoin did come back up. Gold is actually rising. Let's take a look at, I'm going to look at Barrick Gold, GOLD. I want to see just how they did this week. Still got about 18% of upside. As I said, if the Fed has a hard landing, if we do enter into a recession, gold is going to spike. So I am still thinking that it could probably serve you well to hedge your portfolio with a little bit of gold, adding some bonds, depending on your risk tolerance. And it can't be a terrible thing to have in your portfolio or in your holdings. What do we got? Yeah, we did spike up here from 1930 to $20.90 close of business or after hours on Friday. I still think that could be a good way to go going forward. But yeah, let's get back to the investing challenge for what are we on? Sorry guys, we are on week 38 already. First up was going to be UPS. Well, let's just go through it. We had UPS, Micron, Broadcom, Salesforce, and CrowdStrike. I already told you guys that I bought Micron. I bought Broadcom. I told you I was going to be doing that. First up was UPS. I'm not going to spoil it for you or hold it from you. I'm just going to get right into it. UPS was the winner for this week. I do believe that a lot of people that are voting really want this dividend, right? I think that is the draw to buying UPS right now. It's a fairly valued stock. It's low volatility. It's a 5% yielder. And if the world doesn't collapse, I still think UPS is a great way to enter into the stock market, have a good amount of upside with the dividend and some safety. And I can certainly names are going to be more risky to a lot of the people that were looking to vote this week. So yes, I will be adding $200 worth of UPS to our Webull Investing Challenge portfolio. If you do need help getting started, my link for Webull is in the description. But Micron, I'm just going to run through these real quick and give my 2 more cents as to what I think they should do here as far as what the stock should do, not as what you should do. Man, I still think Micron, I just said it, prices and demand on chips kind of bottomed out, right? I think that we saw that from Broadcom. They said the same thing. And now we're looking forward into what chips can they make that are outside of the AI realm that are really going to drive sales higher, right? So I think that Micron and Broadcom could still be purchased long term. Micron about 76% upside. Broadcom, I think it was 20? Is that what we just saw? And this one should have been bought Monday. I already slammed the table on that once. So yeah, we were up. We got about 18.5% of upside still. We probably did about 18% this week. So big moves. If you guys got in on that one, congratulations. I think that was a smart play. And yes, Salesforce, still like Salesforce. I still think that they're going to be a long-term winner, still around 20% of upside. CrowdStrike, I understand that some people still do not want to have the risk associated with buying CRWD right now. 25% upside. So that's what I got for week 38. Buying UPS, $200 worth. And again, if you need help getting started for an investing account, I do have links in the description for Webull for E-Trade like we're looking at right now, and Crypto.com and Binance. We've got stocks for week 39. Let's run through them real quick. Now, first up, we did buy this last year this time, Realty Income. That is ticker O. And yeah, I was actually just reading an article. I believe it was Motley Fool as to why or why not we would be buying O right now. Well, they did increase their funds from operation about 6%, which outpaces their dividend increases, and they still have a good amount of room left to operate the company, pay these dividends, monthly dividends, and still invest more into the properties. Now, some of the downsides here, I believe one of their large leaseholders is Dollar General. They also have FedEx, right? And I think it was Dollar General, Walgreens, Boots, and then they also had FedEx and Walmart, I want to say. So 80% of their client list is in retail, and some of these businesses are hurting, right? So if we do have a hard landing, it's going to be pretty painful for a lot of retail. O Realty, they have long-term net leases. The average one is about 10 years right now booked out, right? So they're going to be in these properties for an average of 10 years. So you can't really necessarily look at what could happen in the 6 months time frame as to what's going to be for O Realty in 10 years. However, if Dollar General were to go out of business or start closing all these stores and these lots are vacant, that would be bad news for O. It would, right? So we got to take that into consideration. I still love the name. I like getting that monthly dividend check from O, and I still think that it's fairly valued, right? We got about 2% of upside, nothing to write home about, but you are getting the 5% yield, or 5.07% yield on O Realty. PE is not typically the way that you evaluate a REIT, right? A real estate investment trust or residential and commercial REITs, right? We're normally looking at funds from operation. That was increasing. I just said that about 6% year over year. So I still think that it's a solid company. I think this dividend is pretty strong, right? They still can go ahead and increase this. They have been paying an increasing dividend for like 236 increases now, something like that. Which it is monthly. It's fractions of a penny that they go up, but hey, it goes up. So I will take that rising dividend payment from buying something, and it's really a sleep easy at night knowing that you're owning real estate backed, stocks right here. So that's going to be number one. Number two is that Fed hard landing, enter a recession, buy all the gold, and run for the hills type stock, and that is Barrick Gold. The GOLD is the ticker. We still saw, some room to run on this one. We just had it pulled up. The quarterly dividends around 2%, but we do have around 20% of upside on Barrick Gold. And this is going to be that hard landing, worst case scenario play. But it could make sense to add some gold to your portfolio in around 18%, 18.5% of upside going forward, according to 7 different analysts right here. You're kind of prepping for the worst, right? Do you want to prep for that worst case scenario, or do you really want to, just buy high risk stuff and pray that things all go right? That's going to be your call, right? So if you are feeling any one of these 5, please get on to the Facebook group and get your votes in for any one of these 5. Every time we do this, there's going to be a vote. That's kind of what I'm doing here. Number 3, I just covered this one as well. Palantir. Man, I still think that I really, really want to add more of this stock. It's already up significantly for me. I don't know that this is the best time to buy it, but man, I really want to add more Palantir. So I'm kind of talking to you guys to see if you guys think it's worth adding at this point as well. Like I said, Bank of America is still pounding the table on this one. They're saying that this thing could go higher. I know there is some insider activity. There's someone trying to sell off, I believe, $1 billion that I just saw on some article on Palantir. Someone's selling off big. But we've seen that in NVIDIA as well, right? Is that a case where they're selling off because the company's getting too big? Is it that they're selling off because they made too much money? They need to buy a new house, a mansion, a yacht, or whatever? Or, hey, do they think that, recession's coming and they can buy their shares cheaper? Perhaps that's what it is, right? We don't really know why they're selling, but I can tell you a lot of the reasons that I would be buying. Yeah, I don't know what the future holds. I still think that this company is going to be there in the future. And I hope that we can 10X. I would be happy with a 5X. That would be great. I would be completely content with that. So I think this is a long-term hold for me. I really don't know if $4 is going to make or break where we purchase this thing. So if this goes down to $31.59, if I zoom out 10 years, is it really going to matter if this thing gets to 250 and I bought it at 35 or 31? Probably not. No. So I still really have high conviction. I really want to add. And I think it's might be worth the risk for me to take right now that Palantir goes higher in the long term. I crossed off one. That was Adobe. I did cross that off. I'm going to throw Oracle in, though. Like I said, it's one that we really don't talk about too much on here, but I do believe that they are in a great space. They have a great IT and software kind of company over there. And I really believe that the fact that they're really leaning into more of the AI to do a lot of different things for business, I do believe that that's going to be a great path forward for them. And they're really going to lean into this heavily for businesses. So let's just read this article real quick. Oracle has nuclear fans buzzing about its plans and confused. They were talking about nuclear power for a lot of the data-driven stuff that I believe this is what I heard on CNBC or Fox Business one morning this week. Tech giant Oracle gives a big vote of confidence to nuclear power this week, sending stocks in the industry higher while simultaneously baffling experts who aren't sure how the company's plans are possible. Oracle founder Larry Ellison told investors on an earnings call Monday that his company is designing one of the largest data centers in existence, a behemoth facility that could consume more power than 300,000 homes. They're going nuclear to power these data centers and to really drive business, to the stratosphere, really. Oracle says it is already building an artificial intelligence data center that will need power capacity of 800 megawatts, more than 10 times as much as most existing data centers. Nuclear powered one would be over 1 gigawatt. Data centers could consume as much as 9% of total U.S. power demand by 2030, about double the current amount. Another reason that utility stocks could be a solid purchase right here. I've heard a lot more talk about California utilities in particular, right? A lot more demand on the grid out there as more EVs, more data, and all things tech that they do out in the San Francisco, Silicon Valley area. So more demand out there, a lot more production of electricity, and costs are probably going to go up for those reasons. So Oracle, a lot of people are really liking the plans and the fact that they're trying to build the biggest and best data center in the business right now. Number 5, we're going to shoot back over to oil, right? I still think energy is a great way to go. Crude is down under $70 a barrel. We're looking at a price of $140.61. We are looking at a dividend. Where was it? 4.7, something like that. 4.7 to 5, I think it was. Let's take a look real quick. But yes, I do think that long-term oil is going to be rebounding. I think after the election, as soon as that, I do believe that oil is going to be rebounding. I think we're probably overproducing right now. Get those oil prices down for the election. We're going to start to see that taper off in one way or the other. Either demand's going to peak back up, or we're going to cut those rates and get more spending, more people traveling, more people going places. And I do believe that oil prices will shoot back up. And that should be a benefactor to all the oil majors, all the travel industry, and a lot of other things along the way, right? So I think that oil is a good play now. I think it is getting too cheap. I really like this 4.7% dividend. You've got a great company in Chevron. We're buying safety. We're buying, a great name here, a quality name. And that's the 5 that I got for you guys this week. So we're looking Realty Income. We're looking at Barrick Gold. We're looking at Palantir, PLTR. We're looking at Oracle, ORCL. And we are looking at number 5 being Chevron, CVX. I will be buying UPS on Monday. It is Sunday. We will get more news about the second Trump assassination attempt. And hopefully we have a decent week out there. Thank you guys very much for stopping by. We will try to invest wisely and really be up to date on what's going on out there. So please, if you see a news story that really sparks your interest, feel free to share it up on the Facebook group, Let It Grow Investing, the podcast page. Or if you want me to share it up, feel free to send it my way, either on the comments on Spotify or YouTube, or however you're watching this. That'd be great. So thank you guys very much, and I'll talk to you in the next one. Take care.